For years, I was a consultant. I did process reengineering and organizational design. And one of the things I did was helping companies think about where their business was headed. And one of the tools we used was called scenario planning. And I've applied it to our business in a little exercise here. I just want to show it to you, 2 or 3 minutes, if you got to hang out with me here for a second. And this is basically the idea. I learned to do this method of kind of 4-quadrant scenario planning. And I've got an example here that has nothing to do with our business. I want to show you that, and then I'm going to apply it to our business. Basically, the way it works is you take 2 things that are kind of uncertain or changing, and you plot them so that what we're looking at here is, this was a COVID example. On this end of the axis is strict lockdowns, and on the other end of the axis is no lockdowns, everything back to normal. On this axis, one end is customers have no money to spend, and on the other end they have a lot of money to spend. And one of the reasons that we might look at this type of scenario planning is, like, say, as I'm a stock investor, and I think we're headed towards lockdowns, but customers have a lot of money. Well, guess what happens in quadrant 2? They shop a lot at Amazon. So if I think that's going to happen, I might want to load up on Amazon stock, or lockdowns are lifted, customers have a lot of money. Guess what they're going to do? They're going to travel. I might buy Southwest Airlines, Delta, things like that. Over here, like, let's say it was strict lockdown and no money, then that's pretty much China, living in China. So what we would do with this method is we would take 2 things that were kind of uncertain or changing, the factors that impact our business, and we would put them in 2 opposing axes and then define each quadrant. And so here's how this works in our business. I think that the 2 things that are driving our business into the next couple of phases are the rates and the inventory. Because what, like we were just talking about with Brooks, is that, yeah, rates are going up, but inventory is still very low. And I totally agree with him. We're probably looking at low inventory for at least the next couple of years, even regardless of what rates do. I mean, they'd have to get to a point that really, really causes people to not buy houses. And so I think basically in our world, rates, if they're low or high, has an impact. Inventory, if it's low or high, has an impact. And I think it's kind of like this right now. We were at a 3% interest rate. We could be headed to a 6% or higher interest rate. And that's going to change our world, right? It's going to push us into a different reality. In inventory, Brooks is just talking about I think he said 1.2 months or something in that market. Nationally, right now, we're at 2 months inventory across the United States. High, actually, normal is 6 months. But you can imagine it's going to take a lot of dampening of demand and increase in supply to get us back to a 6-month inventory. We haven't seen that for years now, right? So we were down here. We were in the low inventory, low rate world. And in that world, prices were just going up, going up, going up. There was cheap money and not enough houses, a lot of competition. Where are we headed? This is what scenario planning is used for. It's used to say, where might we be headed? Well, we might be headed to that quadrant. And in that quadrant, rates are high, but inventory is still low. And so what we kind of do with scenario planning is we say, are we headed to that quadrant? What would tell me I'm headed to that quadrant? And if we get there, how is the world going to change for me? And we might say, well, we're still going to have price increases in this short-term world because there's such low inventory. Rates will dampen buyer demand to some degree, but to Brooks' point, there's a whole army of millennials that haven't yet bought their houses. And so there's just a tremendous amount of pressure on inventory. And so we could stay in that quadrant. We may never leave that quadrant. I mean, unless inventory starts to go up, in the portion of the bell curve that we care about, unless the inventory start to go up, we're going to kind of be going from the lower quadrant to the upper quadrant. And so what we do in scenario planning is we kind of have a discussion about, are we there? Are we headed there? How will we know we're there? What will be different about our business if we get there? The possible long term that we're looking at, which might be a year, might be 3 years, depends a lot. If do rates back down, like Brooks said, they might actually start to pull back on rates at some point if they don't feel like the changes are affecting the market very well. And so in that possible long term, we could end up with high rates, high inventory, and that's where prices start to drop. And so as we look at the business that we're in, where we've been and where we might be headed, using my consulting tool here, I kind of think that's the pathway is around that. I don't see us in that quadrant at the bottom right. It just seems unlikely that we would have rates go back to low, quite frankly. And so this is kind of my last slide on this. I just wanted to show this to you guys as a method of thinking. I think we've already had a lot of good conversations about this migration from where we've been to the possible short-term and possible long-term realities that we're headed to. And so as a business owner, you can really take any two things like this and kind of plot them and create the four things. And then you're kind of asking yourself, what tells us that we're moving from where we've been to that short term? What would tell us that that's happening? And then what is different in our business strategy if we get there? And it might be an example of, hey, when we went from here to here, I'm starting to think about selling some of my inventory, my houses, because this is kind of telling me that prices might be starting to top out. And if we start to go into that world, values might start to decrease and inventories, I might have trouble selling houses over in that world. So, that I think is the value of scenario planning, is it kind of causes us to think about what's that going to be like and what would I be doing different if that was going on. But I think, and I mentioned this, I'll just kind of start to wrap us up and see if any of these thoughts kind of give you any more comments or questions that you might have that we can throw out before we wrap. So what are we thinking about is happening in the next 6 months? Inflation numbers came out today at 8.3. They were hoping to 8.1. So it's still a little higher than they thought. And it just shows us that inflation is still here with us. It did go from 8.5 to 8.3. So if you can get excited about 0.2 drop, not much. Second point, cheap money, 3%, 2%. That's over for now. Mortgage rates are approaching 6%. If you have under a 720 credit score, you're probably already at 6%. And then, one of the things that we talked about was that this is significant because if we just went from 3% to 6%, that's potentially a 20-30% reduction in the purchasing power of the homeowner. They're going to start pushes them into the lower price homes. We kind of talked about that. And so to me, for where you guys are in the market, it's just like Brooks was saying, there is continuous pressure on the low end of the bell curve for the foreseeable future. I don't see 6% rates. I mean, like I said, I'm old. I remember 10%, 12% mortgage rates. So there's a lot of people are going to say, well, it's 6%, still it's a lot better than 10. And I need a house, and I'm a first-time buyer, and I need an affordable house. And so I think there's still a lot of pressure down there. It seems to me that fewer people would be cashing out for home renovations, updates, or jet skis. It's a popular thing in Texas to get money out of your house and buy a jet ski or a boat. Yeah, it's always a good investment. But it just seems like with the rates going up, the refis, things like that are going to kind of dry up, might cause there'd be less demand for renovation materials. So maybe we might see fewer homeowners buying, granite cabinets, countertops, and tile and flooring, all kinds of things. And so maybe we'll see, because interest rates have gone up, a reduction in homeowner projects, and buying, and things might get a little cheaper at Home Depot. Inventory remains tight. Right now, I heard nationally it's two months. So that's probably something that we would be looking at, all of us together. Is inventory starting to tick up? Is it now at 2.5 months, 3 months? That's an indicator. Are days on market starting to increase? Are homes getting multiple offers anymore? Are they selling the day they get listed, or are they starting to stay on the market for a little bit? You guys know how that goes. So it does seem like it's going to be pretty easy for you to keep an eye on the market and say the inventory is starting to increase. But it just seems like in the affordable home segment, you may not see that for quite a while. That causes upward pressure on rent rates. Homes are currently not affordable for many families, so we're kind of at the end of years of stunning appreciation in real estate that has brought us to a point where I think a lot of homeowners have got an affordability problem, and they can't buy a house, and they got to rent a house, and that puts more pressure on rent, demand for rentals, and causes the cost of rent to go up. So it seems like a lot of these factors are working together. I wanted to just ask a couple questions, see if you guys had any thoughts. Do you guys think we're at the top of a market where, maybe the wholesalers are going to start moving back to what they were doing before they became wholesalers? Or do you think there's going to be less people trying to find sellers, or do you think it's just as crazy as ever and just as difficult as ever for the next year trying to find a motivated seller? Any thoughts about that? Nobody? The reason I asked the question is I'm not too sure. Like in the past, when we saw a market kind of top, like one of the things that we would see when a market was about to top is we in the past we'd see like a lot of those hotel seminars for real estate investors would kind of indicate a top in the market. It's like it's got crazy. Everybody thinks they can make money in real estate. It's been years of appreciation. They all think it just straight up. That's the way it works. It may be, as the market starts to soften, that some of these investor lights, these guys that are maybe just kind of dabbling in the business, might take off, go do something else, because they start to perceive that housing is not as lucrative as it was, or whatever. I don't know.
Yeah, in our experience, there's just been a kind of a policy lag, which I think tends to happen for economic activity in general, where it has not really sunk in. I mean, people are, I think as someone mentioned earlier in the call, more tuned into the fact that if they have to move somewhere, it's going to be way more expensive than what their current mortgage is. But in terms of their motivation, they still think the market's really hot from what we've been seeing, and that they should be getting top dollar. And we'll have a bunch of other buyers if we're not able to get them the number they like. But I do expect those expectations to be tempered just with some sort of lag as the rates continue to go up.
Yep.
Hey, Deb, for my area, I can say probably for sure is that we've already seen the top. Where I don't know how far. Prices went up about 23% last year. So we've seen the top, and I could see it the last 6 weeks, especially. We're not getting 25 offers. We're getting 1 or 2 now.
Really?
Yeah.
Very interesting.
And where are you located at?
Northern California.
Okay.
San Francisco Bay.
That's where all your people are coming from, Joel.
Yeah, but you say that, Deb, and I'm not Deb, but Mike, but and it's true. We have a lot of people leaving, but why are prices going up 25%
Yeah.
in this area? It's to me, it's like it shouldn't be happening, but it is. It's weird.
Yeah, it is weird.
Anyhow.